A very good afternoon to you and welcome to Midday News. We are reaching you live from Souqnews. I'm Priya Krumale. Now, procurement delays, worsening insecurity and rising costs of goods and services have emerged as major reasons several state governments failed to meet their capital expenditure and the targets in the first 6 months of 2025. The Punch reports on findings from states' second quarter budget implementation reports reveal that the capital spending across many states remained significantly below expectations, despite ambitious budgetary provisions designed to accelerate infrastructure growth. A fresh breakdown of state government expenditure between January and June 2025 showed that 31 states collectively disbursed 2.75 trillion naira for capital projects. However, this figure represents only a fraction of the 17.51 trillion naira they had budgeted for capital expenditure in the 2025 fiscal year. Now, the federal government has identified Lagos, Ogun, and the Federal Capital Territory, Abuja, as Nigeria's top consumers of premium motor spirits, according to June data from the Nigerian Midstream and Downstream Petroleum Regulatory Authority. Now, out of 1.44 billion liters of trucked PMS nationwide, Lagos accounted for 205.7 million liters, far ahead of the 132.7 million liters consumed across the entire southeast. Ogun followed with 88.7 million liters, while Abuja recorded 77.5 million liters. The southwest region dominated overall demand with nearly one-third of the total consumption at 452.95 million liters, reflecting its population size, industrial hubs, and economic activity. In contrast, states such as Jigawa, Ebonyi, Bayelsa, and Yobe ranked at the bottom, consuming fewer than 12 million liters each, highlighting sharp regional disparities in fuel demand. The Petroleum Regulatory Authority data further showed that a 16.42% nationwide decline in petrol supply dropped from 1.77 billion liters in May to 1.48 billion liters in the month of June. Analysts link the uneven consumption pattern to population density, vehicle usage, and industrial activity, with urban and commercial centers continuing to drive national fuel demand. Now, the National Insurance Commission, NICOM, has deepened collaboration with the Securities and Exchange Commission, SEC, to accelerate the ongoing recapitalization of Nigeria's insurance industry. The Commissioner for Insurance, Olusegun Omoseyi, led a delegation to SEC headquarters in Abuja, where both agencies pledged joint efforts to ease compliance costs and secure incentives that would support operators through the reform exercise. SEC Director General Emomotimi Agama raised the recent enactment of the Nigerian Insurance Industry Reforms Act 2025, describing it as a turning point for financial sector growth. He assured NICOM of the SEC's technical support and highlighted that the full digitalization of SEC processes would help insurance firms enhance efficiency and transparency during recapitalization. Omoseyi also noted that recapitalization is now a legislative requirement designed to reposition the insurance sector for sustainable growth and stronger service delivery. Both regulators emphasized the need for closer partnership with stakeholders to build a more resilient financial ecosystem that can attract investment and drive broader economic reforms. Now, European stock markets slipped on Wednesday following a big sell-off in technology shares on Wall Street. The region's main index, the Stoxx 600, fell by 0.26%, while Germany's DAX dropped to 0.7%. In the United Kingdom, the FTSE 100 also eased after inflation hits its highest level in 18 months. Analysts said the investors are pulling back from tech stocks ahead of U.S. Federal Reserve Chair Jerome Powell's key speech at the Jackson Hole meeting during the week. Now, the concern also grew after reports that Washington may take equity stakes in chip makers like Intel and demand revenue-sharing deals with NVIDIA, raising fears of tighter government control over the industry. Elsewhere, oil prices steadied after earlier losses, while the US dollar gained slightly against the euro. Investors are now waiting for Powell's comments on Friday for clues about interest rate cuts, with markets already expecting a positive move as early as next month. Now, the United States President Donald Trump has renewed attacks on Federal Reserve Chair Jerome Powell, accusing him of damaging the housing industry by keeping interest rates too high. Writing on Truth social media, Trump argued that Americans cannot access mortgages and urged the central bank to deliver a major rate cut. Despite inflation still running above the Federal Reserve's 2% target, the criticism comes days before Powell's closely watched speech at the Jackson Hole Symposium, where investors are expected to get signals on possible policy shifts. Markets are currently pricing in a quarter-point cut in September, with another later this year, far below the multiple percentage points reduction Trump is demanding. Analysts noted that the mortgage rates, hovering near 6.7%, remain elevated despite last year's cuts and continues to squeeze buyers amid higher housing prices and tight supplies. The Federal Reserve, meanwhile, has held its policy rate at 4.25% to 4.50%, citing concerns that Donald Trump's tariffs and strong labor conditions could reignite inflation, even as signs of a cooling economy emerge. Many thanks for watching. Do well to follow us on all our social media platforms at Souqnews TV. I am Oyepriye Krumale. Coming up shortly is Just Africa. Do stay with us.